The 2025 housing market data is sending a very clear message about 2026, and most buyers and sellers are not prepared for what it is actually telling us. If you're waiting for the market to suddenly become easier next year, or if you're assuming that rates will fall, prices will soften, an opportunity will magically appear, you need to see this data first. Because when you actually look at what happened in 2025, the story it tells about next year, 2026, is very different from what most headlines are actually saying. So these trends that I'm talking about, they will shape every buying, selling, and investing decision in 2026. And I don't say that lightly. Here's exactly what I'm going to be going through in today's video. We're going to walk through home prices and appreciation trends, inventory and supply changes, interest rates and affordability, including a really big shift that's happening right now that you might not even be aware of. Buyer demand signals, new construction and builder behavior, and what this means for inventory. And finally, what all of this means and what all of this tells us about the most likely 2026 outlook. So let's get started. I'm going to start with prices because that's what everyone wants to hear about. 2025 was not a boom year, but it also wasn't a massive crash. Yes, prices in 2025 didn't really dramatically move in either direction, but what we saw instead was a resilience, an appreciation, and very strong performance for well-priced, well-located, and honestly well-presented homes. In markets like Hamilton, Burlington, and surrounding communities, prices had a lot of different stories. They flattened in some segments, they edged up slightly in others, and held surprisingly firm despite higher borrowing costs. That matters because flat prices during a high rate environment can often lead to upward pressure once we see these conditions start to stabilize. So what's my translation for 2026? We're not seeing evidence of broad price weakness, which means any increase in demand could push prices higher slightly. Inventory is the quiet story of 2025. Yes, listings came to market, but we didn't see a ton of panic selling. Yes, there was some, or long-term inventory buildup. Why? Because many homeowners are locked into low fixed rates, and others adjusted their spending instead of their selling. And some simply chose to wait. Yes, inventory stayed manageable, not excessive. Yes, we saw more inventory than we normally can, but it is enough inventory that can be absorbed in the marketplace. What this means is that, yes, we do have a lot of supply in the marketplace, but right now we are going to see a lot of listings come off the market and hit the market in late March, early April, etc. So if you're looking to sell in early 2026, get on the market as quickly as possible in January to beat these supply issues that are coming down the pipeline. So let's talk about interest rates and affordability, because this is where things get very, very interesting next year. For much of 2024 and early 2025, the assumption was the rates will come down. It is just a matter of time. But I want to show you something. It's the 5-year Government of Canada bond yield chart. In the past few trading days, the 5-year Government of Canada bond yield jumped roughly 30 basis points in a straight line. Let me tell you, that is not normal. And this matters because fixed mortgage rates are tied directly to these bond yields. When bonds move fast, lenders reprice immediately. And what we're seeing right now is a repricing of rate expectations. For the first time since rate cuts began in 2023, markets are likely now going to be pricing in higher odds of rate hikes rather than rate cuts later next year, which is a very big change from the story we've been telling. This doesn't guarantee that we're going to see hikes coming in the near future, but it does mean that fixed rates may rise short term. And the wait for lower rates that we've been hearing strategy, that really carries a lot of risk when you're heading into 2026 because those rates could increase. So keeping notes on 2026, affordability may not improve the way that many expect it to, and buyers waiting for cheaper borrowing could be disappointed. So despite rates, something interesting happened in 2025. Buyers didn't disappear altogether, but they did become more selective, more patient, trust me, I've been there, and more value conscious in this market. But when the right property came along, there was no hesitation for action. Here's the interesting thing that you don't see in the headlines. In this market, we saw strong showing activity on properly priced, strategically presented homes and multiple offers in certain pockets of the market. And finally, Buyers re-entering once clarity returned and they felt some sort of calmness in the market. So for 2026, this suggests that demand is slightly pent up, not completely gone, and confidence could potentially return quickly, especially if we see rates stabilize or rents rising. So let's talk about what has been dominating headlines in the last year, and that is new construction and builders. In 2025, we saw many builders slow or cancel their starts. Many projects went on pause until they could go on sales, and others focused only on higher confidence developments, meaning smaller projects or rental projects. What this means is that future supply really is going to be delayed, and we won't feel it right now, but we will feel it is in about 18 to 24 months. We've looked at interest rates, we've looked at what happened in 25, we looked at new construction. What does all of this tell us for our overall 2026 outlook? 2026 is not going to be explosive, and honestly, it's not going to be easy, and risk is still there. But what does it tell us? It suggests that prices are more likely to rise than decrease, but by a small amount, thinking 2 to 3%. Inventory will stay the same, if not a little bit higher in March, April, May, when we see a lot of people renewing their mortgages. Affordability remains a challenge across the board, and waiting is not a guaranteed advantage when we talk about interest rates or inventory. 2026 looks less like a reset that many people are waiting for and more like a continuation of what we've seen this past year. If you're a homeowner wondering when to sell, a buyer trying to time the market, or an investor watching rate risk, the takeaway I have for you is simple. Strategy matters more than timing right now. And the people who win next year, those will be the ones who are making decisions based on data, not hope, not crossing the fingers, and certainly not waiting. What do you think the 2026 housing market will look like? Do you expect rates to fall or stay higher longer? Do you expect sales to increase? Would love to hear your thoughts. Drop them in the comments. And if you want more local content that is data-driven, hit subscribe.